seems like the euro has got sick again. This is at least according to the analyst. That's why today's ECB meeting has a major important standpoint for the analyst and for the financial markets. But it seems like for the first time ever, ECB is going to be getting things right. And what I really mean by it is the fact that they, according to the expectations, they finally are expected to understand that, you know, you can't act just like as the big boss and do everything yourself. You need to delegate. And this means that the ECB is expected to start tiering. Before, they were buying the bonds as much as they can, just buy, without understanding the local impact of it or any impact at all. Now they might start delegating the asset purchasing program to the local central banks of each government. The biggest problem there, though, will become if they were good central banks anyway, they would, and the government was good, they wouldn't have been in trouble locally. So there will be a dilemma overall. For today, there are three major expectations. First one is a rate cut, and it's expected to be cut by 0.1% or 10 basis points. The second one is a possible increase in asset purchasing program by 10 billion euros a month. And third one is the tiering that we just discussed. So what could we really expect out of the market? If you participated in our session yesterday, you would have seen that we had for the first time ever, we had two strange orders. One was a buy limit, and just 5 pips or 4 pips below it was a sell stop order. The buy limit order got triggered yesterday, and it gave. So we can see that there is an immediate support over here. The market is within a kind of a wedge formation. The overall divergence is on the bearish side. Of course, if the ECB is planning to, increase the asset purchasing program, cut the interest rate, basically they would be going the same path as the Bank of Japan did, which led to the depreciation of the Japanese yen massively. So if that becomes the case, in approximately 4 hours and 50 minutes from now, we are likely to see that the market is going to be breaking below the 1.0945 level that we had our pending sell stop order yesterday. So the same idea, just like yesterday, we would be looking for a break below the 1.0945 could trigger further bearishness towards, at least initially, to 1.0870 level. However, though, because we understand that anyway the market is going to be on bearish side, why not to actually turn the wheel around and look for the hiccups in the market instead of expecting going with the sell stop order? Why not to actually turn around and look at a sell limit order? What could be a potential sell limit order? You can see over here that we have on the market a level 1.1014 level, which is a significant resistance, and just above it, basically to yesterday's highest side level, we can see this the bearish power becomes even stronger at 1.1035 level. Nonetheless, I think the best opportunity for us for today should be to put a pending sell limit order at 88% Fibonacci retracement zone, for the fact that it could give us, a fake breakout of the bullish side by 25 pips. So that being said, I would be looking for a short order on euro dollar from 1.1040 level, with just approximately 50 pips of stop loss, or even less, 40 pips of stop loss at 1.1080 level, and the targets would be remaining towards, of course, to 61.8% Fibonacci retracement zone, and that's 1.0980 level, then 1.0950 level, and last but not least, my main target would be remaining at 1.0865 level. That would be achievable. That would give us a potential opportunity of 175 pips more or less. This is for euro dollar. Now let's look into another pair that we don't generally analyze, but we should look into it for today at least. And for this pair, it is euro GBP, by the way. For this pair, if we combine the last 2 weeks candles, you can see that the pressure is massively from the top to bottom, which means the market is under pressure. But the main pressure that euro GBP had so far was not because of the ECB or so, but mostly because of the Brexit fears. That's why the euro got stronger against British pound. But now the possibility could shift slightly, and that would mean that, despite the Brexit fears, today ECB could put the pair under pressure. And that pressure that I'm talking about is the following level, the 100% Fibonacci retracement zone, which is basically the lowest low of last week. So if we see that the market is going to be breaking below last week's lowest low, and that's 0.7680 level, we could possibly see the pair to start moving on the bearish side, and the initial target should become at 88% Fibonacci retracement zone, which is at 0.7610 level. Then the following level should be at 0.7520 level, which is the main and the most important support level for this pair. And if that level is also broken, our final target for this pair will be at 0.7425 level, which is the horizontal line that I have put, which is also 61.8% Fibonacci retracement zone. So once again, below 0.7610 level, 0.7680 level, look for a short opportunities and with the targets of 0.7425 level for it. Is it supported by other technicals besides fundamentals? You can see that MACD has been anyway giving a divergence, and if we move on to hourly time frame, we can see that moving averages are sloping downwards as well. So besides, once again, looking for a crazy sell stop order, you could also consider actually putting a sell limit order from 0.7780 level, and that would be basically the 100 pips difference from your entry. And the reason why I'm considering it is that there would be possibly a potential for the market to have a hiccup to this level and then drop back. So you can even have both of the scenarios in line with your expectation. Now let's look on to USD Canadian dollar. USD Canadian dollar, yesterday I was expecting at least some bullishness, because we had actually some entries that was looking for the bullish side. Our take profit one hit, but let's actually take a look at it. USD Canadian dollar, we were expecting 1.3410, and the first take profit was 1.3424 level. So 3410 was somewhere here. We had the pair triggering small 20 pips of gain, but then the market reversed backwards from 76.4. So if you were to short it, if you caught the opportunity to short it, you must have had a major profit, or well, you might have also encountered some loss if you were longing. So what's the significance of this pair for today? Why is it depreciating? I'm not going to look into fundamentals, but I'll just directly compare it to the crude oil. As you know, the Canadian dollar is majorly correlated with the crude oil prices. When the crude oil prices rise, the Canadian dollar rise as well, which means USD Canadian dollar falls. So just like that, we can see the market being correlated with the US crude oil, and the current at the moment the support for the crude oil is within 37.51 level, which is at 61.8% Fibonacci retracement zone of the daily time frame. Because if you are following my Fibonacci analysis, crude oil Fibonacci analysis is not exactly the same as the forex. It's a little different, and you need to understand. So this gives us an opportunity to look. If you are shorting, you can put your take profit targets at 37.52 level, because that's the healthy level. But if you are longing, there will be also a possibility for the pair to go on the long side, and that would be if the pair or if the crude oil is breaking above the 38.40 level, and then your target should become at 39.23. And last but not least, I would recommend not to hold any position, any long position for crude oil above 39.93 level. That would be the main target. You can see that the 161.8 on intraday and the swing are correlating pretty much each other. There is only 20 pips. So it gives us an opportunity to believe that there is a likelihood for the crude oil, USD Canadian dollar to further fall below as well. That fall we could expect is likely to take place just at the level of 1.3350 level. So there is a possibility that the market is going to rise towards 1.3350 level. But from there, you should be expecting to see some kind of break below, and your targets should be moving basically from 1.3350 level to initially to the level of 1.3236 level, then 1.3047 level as our main targets. If you look at it on daily time frame, you would see that the 1.3040 level falls onto the 100% Fibonacci retracement zone, and this is how it is drawn. This is the Fibonacci for this pair was drawn on the monthly time frame, by the way. So final pair that let's look into will be the gold. If we look at gold, we said that look for 1,241 level for potential buy opportunities, just like yesterday. So I'm gonna be sticking to my opinion. Basically, buy opportunities should remain at 1,241 with a stop loss at 1,234. But given the fact that there is the ECB meeting announcement today, I would be trading cautiously, or even the buy limit order. I potentially would be considering it at a lower level towards maybe 1,237 level with 35 pips of stop loss. That would be, I believe, more beneficial. Especially, or even scrap it all and just put my buy limit order at 1,235 level, and for the fact that it's a major support level, it's likely that it would be working much better overall. So take the opportunity, look for gold buy opportunities from 1,235 level, and your stop loss should be just somewhere over here at 1,228 level, and your targets should remain initially towards 1,241, then to 1,249, and then to 1,255 level. As much as 80 pips